Disney down by about 5.5% this morning. Earnings and revenue matched the street's expectations, but the company reported a surprise loss of 4 million streaming subscribers. Analysts were expecting a slight gain. Joining us right now is Jessica Reif. She is BofA Securities Senior U.S. Media and Entertainment Analyst. And Jessica, are you surprised by the steep sell-off?
Not at all. I mean, with Disney, there's always puts and takes. It was a very complicated messaging and quarter. And the company always, on their quarterly calls, they always give the headwinds. They never give the tailwinds. So numbers are coming down, but they highlight what could happen that would go wrong is what could happen that would go right.
The streaming properties, that's a pretty interesting proposition. They have said that they are going to try and move towards profitability, which I think is what Wall Street wants to hear. Losing 4 million subscribers, I know it's the second quarter in a row that they've lost subscribers, but it's also after raising prices by about 40% at the end of the year. That's, I guess, why I'm surprised that people are so surprised to see a loss of 4 million subscribers.
Well, put it in context. The 4 million sub loss was from India. They lost
right.
Or they gave up, They gave up IPL. These are 50 to 60 cent sub ARPU. It's not financially significant. I think the messaging is the important thing. What Bob Iger said last night was that their plan is to raise prices in the U.S. later this year. Remember, the first price increase, the 38% price increase, was in December of 22. So price increases are coming, which will have the dual impact of raising ARPU on the subscription tier, but it will push many consumers into the advertising tier where the ARPU, or the revenue per sub per month, is the same or better than on subscription only. He also said they will introduce advertising in Europe and other markets later this year, and having a lower priced advertising tier will drive subs. So there are definitely positives coming. And the other thing that I think is very important, we saw this with Warner Brothers Discovery. Disney said they are taking a charge for content between $1.5 and $1.8 billion in fiscal Q3. So in this current quarter, the June quarter. And basically they're getting rid of, or they're eliminating content from the platform that either consumers don't watch, that cost them a lot of money, so they're rationalizing costs, or that they're paying residuals on, or there's amortization. So their cost base following this write-down will become lower. There's also a big focus on SG&A, overhead, and marketing. But there were definitely signs of moving towards profitability in streaming.
So you sound like you like the stock, even though you're not surprised by the sell-off?
Yeah, I mean, there were other things as well. I mean, they're going to put the Hulu, they're going to have Hulu offered as a tile within Disney Plus, which will keep subs on the platform, so you don't have to get out of Disney Plus and go into Hulu. And that should help drive engagement and lower churn and hopefully help advertising. There were definitely some other things going on in theme parks. You're starting to see global theme parks pick up for the first time since COVID. And we saw that with your parent company, Universal, as well. So that's a positive and should help for the next couple of years. So with Disney, there's just a lot of moving pieces.
I mean, Disney has other complications, too. We've got the writers' strike. I don't know what you think that means if that strike continues.
It doesn't sound good. And, you may have other guilts coming in. So the short-term impact for most of the studios, Disney included, will be a decrease in cash costs going out the door. But it's, sort of more focus on international content, non-scripted shows, but it's not a positive, and it may delay the season. So that's problematic, but it's problematic for the whole industry, not just Disney. And, they have a pretty deep library. It's not good.
What's unique to Disney, I guess, is the situation with Florida Governor Ron DeSantis and the legal battle that is taking place. How do you handicap that?
I mean, financially, it's probably not as meaningful as very nasty headlines. Bob Iger, who I think is incredibly diplomatic, he really came out swinging. And, because he feels they're being attacked. And, he very forcefully stated Disney's point of view. But this is something that obviously will be worked out between Disney, which is the state's biggest, one of the biggest employers, if not the biggest, But again, I think it's probably less meaningful. They also have some strategic decisions to make. Hulu, again, your parent company, Comcast, owns 1/3, and there's a put call. Disney is most likely going to buy that for $9.2 billion in January of 24. And the other major issue is the decline of the linear universe, with subscriber declines accelerating. When did they make this transition from ESPN, the linear channel, to ESPN Plus? It's a big deal.